Hello everyone, hope you're doing well. So in today's video, I don't want to show you how I made 1,200 selling on GDP USD. So this is a very nice simple concept about the smart money and how you can get into trade and also, make a lot of profits with the same strategy. All right, fam. So let's get straight into the breakdown. So first and first, you need to understand is the market structure. Now you need to know, is the market buying or selling? Now understanding the market structure, you also need to know what direction is the market going. Now that leads us to the order flow. Now we have an order flow which is bullish. Now you need to understand on the 4 hour, the order flow of 4 hour is called the directional order flow, while the 15-minute order flow is known as the expectational order flow. But this is also called a fractal market structure. So that's how it's you can also differentiate between the two of them. Now let's say this here is the 4 hour order flow. You can see the market breaking structure, respecting the demand and breaking structure, right? So here on the 15 minutes, all you do see is the market give you a fractal move like this. So you'd be seeing the 15 minutes making moves like this, and you have this here. You already had a change of character on the 15 minutes. Now on the 4 hour, you are having a pullback, while on the 15 minutes you are having a change of character. Now you will have the market respect to the supply and still give you a break of structure, continuation, break of structure, change of character. Now this here is fractal because this is different from the 4 hour. All right, now you keep seeing this happening right on the 15 minutes, and another time you just see the market give you a change of character and stuff like this. You keep seeing happening, and you keep seeing stuff like this happening on the 15 minute. Now this lead to understanding the fractal market structure. All right, so I would like to give this another different color for you to probably understand. Maybe I should give it a red color. Yeah, red is cool. So right here now on the 15 minutes, you're having this to be a break of structure, this to be let me target to be a break of structure. Now you have this to be a break of structure, and you are also having this to so you have this breakout structure, and the next one you have, is this messing me up? So you have another breakout structure from this level, all right? So you also have a breakout structure within this level. Now, once you start having this multiple breakout structure, at some point when the reversal is coming up or the pullback is coming up, coming in on the 4 hour to mitigate off demand level on the 4 hour. Then on the 15 minutes, you do see a change of character. Now, this change of character tells you that, okay, at this point that the institution really want to sell. All right. Now, you do have to look out for the last level where the institution, probably the Asia, the London, the New York, or the New York AM left the last order in the market, because this is where the next section would like to pick a sell order and continue to the intent direction before they continue to the overall market direction. All right, so that leads us to this market structure here on GUSD. All right, so if I head over to the 4 hour, now let's head over to the 4 hour. Normally I didn't want to make this lengthy, but I think it will help us for a better understanding. All right, on the 4 hour. Now I have to take this drawing out. All right, so let's take this drawing out, and I will take this whole other drawing out as well. You know how to take this out too. All right, so what you need to understand here is what is the order flow here. Now remember, the 4 hour is the directional order flow, right? It's telling us the overall direction of the market structure. All right, so that's very simple. Now let's look at this here. We can see we had this breakout structure. It closed with a full body. We had a breakout structure, and we also the market, you can see the market respected this level here. And what happened? The market sold. All right, it sold from here to the downside, and also we had this breakout structure, which is a continuation. All right, now having this breakout structure, I know a lot of smart money traders, including my own personal student. I've seen my students send me this kind of chart recently, marking this out to be a breakout structure. But trust me, fam, this is never a breakout structure. And the reason why this is not a breakout structure is because there wasn't any valid pullback here. All right, what I mean by a valid pullback is you're seeing the bullish candle closing above each other. Now you need to see at least 3 good bullish candle close above each other and break structure before you can call it a valid pullback. So we didn't have any 3 candle close above each other. Like, let's take this as example. We have 1, 2, and 3. This is the high and this is the low. Now let me just mark this out for you to understand. Now this is the high and this is the low of this candle. Now we have this valid pullback here and it's break structure, giving us a valid breakout structure. Now we have a fair value gap here. This is the last level where the last transaction was held between the institution. So y'all can see this, right? I hope you understand what I'm actually talking about right here. So here, this isn't a valid pullback. All right, so where is now our trading range? Our trading range is now, we are now ranging from this high here to this low. So let's now mark out our trading range. We're ranging from this high and this low. So all we need to see is the market pull back into this level. Now initially I marked out this fair value gap area here to be, because this is around the 62% of the fib, because I use my Fibonacci. So if I should fib from this swing high down to this swing low, now here is the equilibrium level because it's the 50%. All right, so let's head over to the fib. So now at the fib, you can see here is the equilibrium level, and normally, let's say 50% times the market might come back, respect and start selling at the 50% level. It happens sometimes. Why? Sometimes it comes into the 62% level. So normally I marked out this 62% level because of the fair value gap there. For the market to fill in the fair value gap, probably we might have a sell from there, and as well as this level. Previously, you'll see this line here. This was because a level I marked in as the 79% level, because I expect the market to sell from there. And if we are to go bullish, all right, I expect the market to still come back to this level here. Now, the reason why I marked out that level, now let's hold on to this. Now, I had to flip from once I see the pullback, because normally I'm still overall bearish, all right. I'm still bearish on this, on GU, until I get this high being taken out, which is this high here, until the market break this high, giving me an overall change of character. But for now, I'm still bearish. All right, so maybe I should skip that part and let's focus on what the market is actually giving us at the moment. All right, so now with all this, fam, I was more focused on sell. I wasn't, looking out for buys. So once I had the market get to this point, all I was now looking out for, okay, is to see that 15 minutes change of character. Now this lead me down to the 15 minutes time frame. So on my 15 minutes time frame, all I need to see was a change of character happen on the 15 minutes. Now we had this change of character right here. So we can see a break of structure, and we had the next, which is the change of character. Now the change of character must close with a full body candle close, not with a liquidation or whatever. It must be a full body close candle, right? So looking at here, we can see what happened. The market gave us a liquidation first, and this candle here closed with a full body. All right, so that gives us a valid change of character. You can see, so having this valid change of character right now, so I understand that this is time to sell. So I need to look out for where did the institution leave the last transaction in the market. So I use my indicator. I have two indicators that I use in the market. I use the Q zone and the ICT Q zone. All right, now I will explain why I use two indicators in this market. Now this Q zone here, this is the Asia section, while this here is the London section, while the red here is the New York section. Now the reason why I use the second indicator is to show me where the New York AM come into the market. Now this New York AM section might sound new to most people, but if you have been following me, or probably if you have been watching my video, my content, you do understand that the New York AM section is the section of the Wall Street stockbrokers. This is when they trade, and this section open 2:30 UTC, while it's open 3:30 GMT. Now this time difference in America, it's 9:30 a.m. when the stock market's open. So this here is when the stock market traders come into the market. All right, so they also have their move in forex market, so not only on stocks and whatever anyone might tell you. All right, so looking at this right here, I use my indicator because I use the Q zone. Now the ICT isn't really showing because that's it's has been passed, it's passed already, from it's passed, so they don't really show you, you know, the section that was holding at that particular time. Sorry, fam. All right, so now this was the the Asia section here. Now what happened is the Asia, this is the last level where they had their last transaction in the market. So I marked out this level patiently. Now all I was waiting for is this level to get mitigated, but unfortunately it mitigates during the London section. That was on Wednesday, 25th, sorry, Wednesday 29 this year. All right, that's a couple of days ago. So when I see this level here get mitigated and a change of character, and remember, this is the last level where the Asia put in a sell order. Now the London came into the market, so all I need to do is break down to my 1 minute time frame to confirm if the London section really want to sell from that level where the Asia section put in the last sell order in the market. So breaking out to my 1 minute time frame from now, let's look at this. Now the Asia closing period, this gave us a breakout structure. All right, this was the Asia close, during the closing. That is a few minutes before the London came into the market. So that's the Asia close. And let me just shift this zone a little bit. All right, so once we had this Asia close, this is another break of structure right here. Now we had this break of structure, and what we had next was this to be called a change of character. And I know a lot of smart money traders would have taken their entry from probably any of this level. All right, but what happened here is what I was expecting is a sweep of this high. Now the reason is because this was the highest price that was made. This is the highest price that was made before the London section come into the market. Now let's look at this closely, from this is where the London came into the market at this price leg here, which is 7:00 a.m. All right, now this is where they came into the market. Now this high here wasn't the high of the London section, so all I was waiting for is to see this high get swept or liquidated. Now unfortunately we had this high get swept nicely, and the candle closed the full body, and after that we have another liquidation here. The market liquidates this high at this point with a wick. All right, taking out the early sellers in the market. And with that, now I was waiting for this low to get broken, because this is where the last low the London actually made, before they made this high right here. So once I get this low being taken out nicely, I went to my 3 minutes to look at, okay, what do I have on my 3 minutes? So looking at that, going over on my 3 minutes. All right, so what I was actually looking for was a very good potential supply level I can place my sell order from. All right, so while I was here on the 3 minutes, now all I saw was this good level, all right, of supply. And you can see we had these orders here, so I marked out this level and placed my stop here. Then I took my entry within this level here. All right, so went to my 1 minute time frame to look at that supply level. All right, I went to look at that order block because that is an order block that was left behind. Now I'm done with this, so I can turn off my indicator. All right, so going over here, then let's look again. All right, so here's if I'm now going over here, you all can see the level where I took my entry from, and also I see this level, I had a fair value gap, so I refined it to this level of a little bit of fair value gap to be an area where the last transaction was held in the market. Then I took myself from here, placed my stop at the top of this wick right here, and I targeted just 5% because that's my profit management rule. I risk 1% and target 5%. All right, now this signal was shared to the free Telegram channel. I don't charge for signal. I don't charge for signal. So my signal is always free. And if you are yet to join my signal channel, the link will be dropped in the description of this video. All right, fam. So this is it, 5%, and this is the proof of the signal here. Before this is before and this was after. All right, I asked everyone to remove your risks of the table, which is move to break even. All right, now this is while I was running profits, $600 in profits, and on a 5K account I was at 190, and this is when I hit full take profit. This is it, the full take profit here, roughly 1K and $257 on 5K account, while there's a 20K account. So that's it here on GDP USD farm. This is how I was able to make $1,200 selling on GDP USD. Now I do give you a bonus, all right, on this same breakdown here on a trade on USD JPY. All right, so here on the JPY, still the same thing. You need to understand the order flow. All right, now once you understand the order flow, that will tell you what expectation are you expecting the market to go, where are you expecting the market to go. All right, now still the same thing. I use my indicator. I had to look at what section really what was the last section that gave probably a break of structure, a change of character, whatever it might be. All right, so let's look at this from now. We had this last section here. This is where we had the last order before we had this break of structure, and this was during the Asia close and the London open. So there was a huge order here. You can see this was London open, and boom, the market starts selling to the downside. So this is during the Asia high, but I don't trade during the Asia. So I was expecting the London to come into the market to give us a sweep. All right. So actually, I didn't take this trade and I didn't see this trade. Trust me, fam. So there was no way I called for this trade because I didn't take it, but I just went on UJ and I saw this and I be like, okay, I think it's best I should also, give you all this breakdown to also to show you all, rather how this work. All right, so it's very easy peasy, fam. It's very easy. So now let me turn off my indicator and let's head straight to the breakdown. All right, so now looking at this, fam, the Asia high was swept nicely, right? So the Asia high was swept, and what we're looking at for, we are now looking at for the area where we need to get involved. Now let's look at this, fam. Let me use unback the indicator. Now we had this break of structure, change of character, break of structure. Now, once we had that break of structure, we understand that this is a level we had a break of structure, which is a very good one. And during the London Open, what do we have here? We have a valid pullback. Just like I told you, you need to have three candle closing below or above each other. Now we have this 1, 2, 3 candle and 4 candle close to the downside, which is a value pullback. All right, so we had this break of structure, and once we had this break of structure, we had this here to be what, to be a change of character. So once we had this change of character, all I was just looking at is this is a very nice level, and also a level we had the last transaction during the the London Open. Marked out this level. This is where you could have gotten your entry, and you do sell from here. Boom, is a PC, fam. Now you can look at it and target 5%. Now 5% is always my rule. I don't care if the market is going over 5% or whatever. I always look out for 5%. If I risk 1%, I'm going for 5%. I don't care anything more than 5%. It's not my problem. All right, so I don't chase high RR. No, it's not my thing. I just fix it to 5%, and that's it, fam. You can see easy peasy. You just hit a take profit of 5%, you're good. All right, so that's it, fam. Easy peasy. And if this is your first time, fam, of actually bumping into my channel, I do appreciate you hit the like and subscribe button, and also comment, fam. This help me build this channel and also help me push the channel to reach out to as much people as possibly as I can. So I really appreciate your fam, and I love your fam. I trust in you, and I just want to use this opportunity to say thank you to my TikTok followers. In case you're watching this video from TikTok, I appreciate you, fam. You all really made it possible for me to hit a 400 followers. Like, it's really amazing, fam. I love you, and I really appreciate you. And I promise to bring a very good, amazing content for you on a steady as whenever I can, fam. Like, you feel me? All right, so that's it, fam. I love you all once again, and peace out.